Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth. How you doing today? We are spending the month of August focused on people that are close to or in retirement because those of you that decide to join us, and of course this is marketing, but those of you that decide to join us, we're going to spend all of September with you guys in our wine and wealth classes and things like that so that we can go over these nitty-gritty details of how to add alpha, how to add value in your retirement, because it's so much more than just, hey, pick a good investment and hope it goes really well, right? So today what I want to do is I want to actually go through 4 ways to factor in or 4 ways to actually focus on retirement wealth, retirement strategies, and I'm going to do something different. I'm going to actually use the words that you would hear or want to search if you were looking up a financial planner, financial advisor, or somebody that can help you with this. Hopefully you choose us, of course. We won't use the big words on you, but I'm going to use them today so that you know where to go. Now, for most advisors, tax loss harvesting is a big word. You know what that means, right? And they usually end it at that. Now, that's a shame because there's so much more you can do. So we're not just going to say tax loss harvesting today. We're going to actually focus on a bunch of things. And number one, the code word or the phrase that would be used is tax smart asset location, right? Not allocation, tax smart asset location. And so this is the idea of you want to have your investments. You've got a bunch of stuff spread over 401ks and IRAs and things like that. You want to have the lowest total returning investments, maybe in an IRA or a TSP or something like that. And you want to have the highest total returning investments in a Roth IRA. And that makes perfect sense, right? Because over the years, you had hoped that your IRA, you want it to grow, but you want everything to grow, right? But you want the Roth IRA to grow even more if possible because there's no tax over there. So a lot of times people just open an IRA and get to work. They just start investing. Well, let's think about that. If you're near retirement or you're in retirement, we don't want you to be in your late 70s, your 80s with very high growth investments in an IRA because what? At age 72, presumably it'll be 75 soon, you have RMDs. And so we don't want this massive growth raising your RMD each year if you can avoid it. So that one's kind of the initial focus, right? So you're going to look tax smart asset location. That's where you're looking for things like that. All right, the next thing that you want to look at would be not just tax loss harvesting, but multi-account tax loss harvesting. It's likely that you're married or will be married or with somebody and you have a nest egg, but in that nest egg is multiple different accounts. Maybe each of you have brokerage accounts, joint accounts, stuff you've inherited over the years from family members passing away. Well, it's not just about saying, how can I sell winners against losers and end up with a net zero tax basis, right? It could be that you are 71, or if you're not that old, if you're not 71 yet, just pretend you're going to get to that point. It's inevitable, right? So you could be 71 and your spouse could be 62, right? Maybe there's a spread in your age there. Well, multi-account tax loss harvesting is the concept of not only doing the regular tax loss harvesting, but what if the lower basis investments were held in the younger spouse's name? Because it's very likely that if you're the man and you're 71 and you've married someone or you are with someone who's 62, well, statistically, it's likely you're going to pass away before them. Why would you want the low basis investments, whether it's stocks or real estate or anything? Why would you want that in your name, right? Or in her name? You want it in your name, right? And the reason we say that is because you're going to die before the spouse. The spouse gets the step up in cost basis, right? So if we look at your nest egg and we see all these investments, we likely want to have the lower basis stuff in your name. So when you die, your spouse gets the step up in basis and doesn't have to worry about gets the tax benefit, so to speak. It's not tax break, but gets the tax benefit. You also want to use multi-account tax loss harvesting to spread out gains over years, right? It doesn't mean that you're going to necessarily think of your accounts as buckets. You're thinking your dollars as buckets. So many people fall into that trap there. Number 3 would be the they're going to call it tax-aware transitions, right? So that's a fancy word for, hey, you've had your whole life in your 401k and you didn't rebalance, you didn't really know what to do, you just did a good job saving money. Well, as you get in or near retirement, chances are that you have what they would call a concentrated position in one fund, in one stock or something like that. And so you may want to say, well, I'm about to retire or I'm in retirement, so I need to take some risk off the table, but don't do it blindly. Take it off the table in the concentrated positions that you're in. Bring things back into balance, right? So play safer with the dollars that have grown a little too big over here. The great example would be over the years you bought a house down the road and somebody passed away, so you bought that house. And then this one was a good deal and you fixed it up, so you bought that house. You are concentrated in one neighborhood. Maybe you bought a vacation home and that caused you to find other properties in another state. There's some diversity there, but otherwise you're concentrated in one position. If you don't sell one of those properties there and spread out a little bit, you obviously have a little more risk. So tax-aware transitioning into retirement, something I love to do because most of you end up having considerable investments in one area, one sector, one asset class, and we want to focus on that. The final thing would be, the key word would be multi-account rebalancing, right? So this is different than the tax loss harvesting. Multi-account rebalancing. Again, you're taking everything you've worked your whole life up for and you're factoring it all in to one nest egg. Maybe it's some real estate, some royalties from a business, maybe the sale of a business or a partial ownership of a business. You've got some stocks, you've got some mutual funds and all the stuff you've accumulated. These are inevitably going to be in multiple accounts. So looking at all of those together, right? Thankfully, there's software for that. And we can look at that and say, we need to rebalance some back to stocks or rebalance some over to a money market fund or whatever it may be for your situation. Now, as you're researching this, if you decide to work with Jazz, of course, thank you. We hope you do. But if you're looking around, you want to work with someone who doesn't just ask you to dump a bunch of information into software and then spits out a result. The way we do it here is, yes, we ask you to dump all the information into a software because we don't know anything about you. But then we first follow up with, hey, can I verify with you that what you put in there is what you meant to put in there? Can I ask some questions about the dollars and goals and savings and income that you put in? What I want to do is verify that what you put in is as accurate to real life as possible. As soon as we do that, well, then the geeky stuff can start, right? So you want to work with somebody that says, hey, put the information in there, then let's get together and make sure that it's accurate, make sure there's no changes. I don't know that it's ever happened where somebody put the information in and it was correct, right? That's how much we tend to go through and say, yeah, you meant to say this, didn't you? Or this is a typo, let's fix this. So make sure that that works for you. Make sure you work with somebody that you like, hopefully that has the heart of a teacher and is always here helping, teaching things that maybe you didn't know. All right, that's all I got for you. If you're not interested in anything, maybe hit the subscribe button. You know what I mean? We got good videos, we got good stuff, but otherwise, I'll see you later on The Closing Beat, our live stock market update show every single day, and you enjoy the rest of your day. See you then. Hey, you made it to the end? That's awesome. Well, if you want to check out more geeky stuff, be sure to check out that video over there. Also, if you could subscribe, that really help us out. We're financial advisors that love to teach, and you'll find all kinds of free stuff on our videos. And remember, keep your dough straight. Yeah, I did it.